As Carrie Underwood once said, there may be something in the water with those fish there as well. Thanks for joining us here for the Roundtable. And it's been quite a while, over a year and a month since Russia invaded the Ukraine, and also it's been 4 months, at least that, since sanctions, embargoes, price caps have also been put in there as well. What's been the effect of all this, especially what's been the effect of shadow fleets as the Russian economy, especially its oil economy, continues to work here in 2023. Joining us to talk about it, we've got Greg Miller, our senior writer out of New York City, and also Dr. Sal McCarglano, associate professor of history at Campbell University in Buies Creek, North Carolina. Gentlemen, thanks so much for joining us here. Greg, I know we could probably do a half-hour show just on this particular topic, and we talked a little bit about this kind of leading up to the show, but kind of explain the situation that we've got right now, especially with shadow fleets and also regular European tankers, and how Russian oil is still kind of prospering here in April 2023.
Yeah, well, the situation has changed over the last couple months. I mean, to go back, December 5th was the EU ban on Russian crude imports, and February 5th was the EU ban on Russian products or diesel imports. And on those same dates, the EU and the G7 countries, including the US and the UK, banned the provision of shipping services for Russian exports to any country. Unless the cargo was under a specified cap, which was $60 per barrel for crude and $100 per barrel for products. And so at the very beginning, the mainstream tanker fleet was very reluctant to become involved in this, and in particular, the UK shipping insurers weren't quite sure about this whole cap system and how it would work. So after the December 5th crude ban, almost all of the 9 out of 10 crude cargoes leaving Russia were on the so-called shadow fleet. These are older tankers bought in the secondhand market, opaque ownership, usually bought out of the UAE or India. Some Russian money was involved in that, did not use Western insurance, did not use dollar transactions. But over time, that has really changed. The Western tanker fleet has become more comfortable with handling Russian exports, and in particular, the UK insurers have become comfortable. So as of March, really only 3 out of the 10 crude cargoes leaving Russia were on the so-called shadow fleet. 7 out of 10 were on private European tankers that were insured by Western insurers. And after the product regime came into play on February 5th, that was also very different as well. Only 1 in 5 of those cargoes left Russia on the so-called shadow fleet. 4 out of the 5 were on traditional Western tankers. So it's really changed. People have gotten really comfortable with the cap system, assuming, of course, that crude and diesel remains underneath the cap.
Sal, it's very odd that I get to actually ask you a history question as opposed to a shipping question some of the time. But as you look at this particular agreement, and again, this is we're kind of in uncharted territory with price caps as sanctions as well. Has this worked, or is this just possibly a massive misjudgment and foresight?
Well, I think the G7 and the EU have found out that shipping is very hard to regulate in many ways. And the intended consequence here, I mean, you got to remember what the intended consequence here. The goal was to keep Russian oil flowing because they didn't want to cause a global disruption, but at the same time to limit basically the impact of or profitability of the oil for Russia. And instead, what we've seen is, as usually happens in shipping, it will flow, it will find a path to get there. And what we're seeing right now is that Russian crude and Russian diesel is actually forcing the market down. It's actually lowering prices. And you're seeing Russian diesel, for example, going all the way to Brazil. And it's cheaper to get Russian diesel shipped to Brazil than to buy diesel out of the United States, for example. So this is actually a benefit. And I think one of the historical lessons that's being learned here, it's very hard to regulate shipping, to put sanctions in place that you don't want to put true enforcement on. If you don't want to block ships coming in and out of a certain strait, then it's very difficult to get what you want. The unintended consequences of shipping are in full force here.
Greg, obviously there were intended situations that were supposed to be brought about by these embargoes, by these stipulations, by these price caps there as well. As you look at it, say for instance, from a global market perspective, what was the intended, maybe not necessarily what was the intended situation, but what kind of situation have we created with this, and are we okay with it?
Yeah, I mean, as Sal said, I mean, the goal was to reduce the Russian income and keep the oil flowing. The crude has continued to flow as of March, according to Kepler, 3.5 million barrels per day. Most of that going to India and China primarily, India taking most of it. And in March, Russian diesel exports were 2 million barrels per day, which was a high. A lot of that was going to Turkey, North Africa, West Africa, the Middle East, and all the way to Brazil. So that has worked as far as cutting Russia's income to a certain extent. I mean, they are taking big discounts on their crude and especially their diesel, but at the same time, they're also shipping more. So they're getting a bit more revenue in terms of the volume than they did before. And they're probably getting some money through the back door with their involvement with these shadow tankers. So it's worked better than a lot of people have expected. I mean, nothing's perfect, but the West had to do something under the circumstances. So that's where we stand now.
Sal mentioned that rates had dropped basically because of this. Do you concur with that assessment there as well, with what you're seeing?
Well, freight rates for Russian exports are up. I mean, and that's why the Western sort of the mainstream tankers are coming back in, because they're making a huge amount of money on these Russian cargoes. But it is, when you talk about the price of fuel, it's been very helpful to keep all these flows going. I mean, if you think about diesel, I mean, the big concern everyone had was diesel. Diesel is so important to the Western economies, for trucking, for industry, for transport, for agriculture. The key was to avoid a spike in diesel. And I just looked at the DOE weekly average retail price for diesel used for the trucking surcharges at $4.12 a gallon this week. If I look back, that's a few pennies more. It's basically on par with where it was before Russia invaded Ukraine. And it's actually down from where diesel was during the EU sanctions on February 5th. So from that perspective, it all looks like it's working. The big problem going forward is the cap. The price of crude oil is inching up because of what OPEC decided to do starting in May. The supply-demand balance in the second half is looking like the price of crude's going up. As the price of crude goes up, it pulls up the discounted price of Russian crude, and we're at or above the cap as of this week. So this is going to have to lead to some big decisions on the Western governments on how do we handle this. The price of diesel is still well below the cap, so that's not a problem yet. But the interesting thing looking forward is what's going to happen in the months ahead if Russian crude clearly goes over the cap, if the UK insurers see that and they pull insurance from all these Western tankers that jumped in to help out.
Gotcha. Yeah, that dovetails beautifully into my next question here for Sal. And then, as you look at obviously the price cap, and this is a situation where we see maybe change. Sometimes when things don't necessarily work out, you might like to change course a little bit, maybe change a strategy here or there. As far as exit strategy is concerned, obviously all of this was predicated on Russia's invasion of Ukraine. Again, we're over 11 months, or excuse me, over 13 months into that there as well. As you look at this, are there changes that the G7 that they need to make, or is there an exit strategy out of this as we continue to move forward? Granted, it looks like Russia may not get out of this Ukraine conflict right now. It seems like without help from China.
Well, I think one of the things you have to be looking at, too, is Russia's recent discussion about ending the Black Sea grain initiative on wheat coming out of Ukraine. That initiative, again, you're getting into the long-term aspect of a conflict that has now reached the kind of World War I trench stage. And that means that this long-term conflict is going to be economic. Which one breaks first? Is it Russia or is it Ukraine? And as long as Russia can keep exporting out its oil and its diesel fuel fuel. And I think Greg's exactly right. There was this story earlier this month from the Wall Street Journal talking about the fact that Japan may buy Russian crude if it goes over the cap. If Russia can keep its economics flowing, if it can keep money coming in through the sale of oil and diesel, but Ukraine can't keep exporting grain, which is the big issue right now. We just saw issues with Eastern European countries about an excess of grain. You see Russia balking right now on potentially renewing that. That's a long-term economic struggle. That's where shipping really comes into the conflict that's being waged in the Black Sea. One of the reciprocal agreements between the two countries was Ukraine doesn't interfere with Russia. Russia doesn't interfere with Ukraine shipments. That ensures Russia oil and grain and fertilizer getting out. Now we're seeing that maybe that deal goes away and Russia's looking for alternative grain shipments, maybe through Turkey and overland, to supplement themselves.
Greg, we got about 2 minutes left here, so let me, if you can take a minute perhaps on this. As you look forward in terms of, obviously it's so hard to predict what could possibly happen even in the next month, let alone 6 months or a year. Are people okay with this? Are we going to maintain the status quo, or do you see changes coming?
You know, I think right now people are okay with this. I mean, as far as the exit strategy you mentioned, I wouldn't think there would be any exit strategy from, this sanctions regime until the end of the war. I think that we're going to run into a problem here in the next couple months where the West is going to have to decide whether they're going to increase the cap on crude, which defeats the whole purpose.
Right.
So there's going to be, and it's going to be, the complication is, the tanker fleet, it's a gray area as to what they're going to do because the insurance may get pulled, but the Greeks in particular are not averse to risk. I mean, they went into Venezuela after the U.S. sanctioned Venezuela, so they're going to find a way. They'll probably switch their insurance. They'll do all sorts of things. So I think this is going to be an interesting, confusing time we're going into with the cap and with the politics over the cap. Gotcha. But it looks like it's going to continue to flow, whether it's on the shadow fleet or the Greeks.
Sal, we got about 30 seconds here. In your estimation, is this just going to come down to who blinks first?
I think it's going to come down to the world economy. And the question is, how much of a disruption do they want to do in cutting off Russian oil? And I don't think they can cut off Russian oil, which means that in many ways, Russia's in the driver's seat in really pushing this along. As much as they like to say they can't, they are. And that's where it comes down to. It's going to be a very interesting situation to follow. Gentlemen, thanks so much for joining us.
Thank you.
All right, let's move on. We've got Kaylee coming up next with our last check of headlines.